Hello and welcome to this Tuesday's morning market briefing. We've got a lot to talk about, but firstly, the US and UK step up pressure on Houthi rebels to deter Red Sea shipping attacks, as well as that Apple's $85 billion a year services business faces legal reckoning. As well as that, we've got lots to talk about on the charts. Also, with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. Before we go straight into it, make sure to subscribe. But the first article to talk about, of course, is the UK and US. Now, the UK and US have ramped up pressure on the Houthis, who are targeting private vessels, and this act by the Houthis is disrupting the critical maritime trade route of the Red Sea, of course. Now, we've been covering kind of the issues and the attacks by the Houthis, of course, since the October the 7th massacre, where Hamas did storm Israel and massacre over 1,200 civilians, taking many more hostage. So we have been covering this issue, which has been growing. Now, largely, the Houthis have been allying with Hamas, which obviously Israel is now in a campaign against within Gaza. And as we've seen from the Houthis, they've been firing many projectiles towards Israel across the Red Sea, or along the Red Sea. Now, the Houthis, they are a Shia militia group funded by Iran. So one of kind of Iran's proxies, which have been fighting in the Yemeni civil war since about 2014. Now, this is quite a powerful group within Yemen. Obviously, Yemen has been largely damaged by this civil war, but the Houthis has remained quite strong throughout. And as a result, these kind of escalatory issues and kind of discussions around further conflict with the Houthis, of course, really does worry many individuals and especially many nations within the kind of Arab region, as of course, if the Houthis now do become even more involved in this conflict through maybe direct action and certain direct conflict with actors such as the UK or US, we could see this conflict go into one which is more of a regional conflict, of course. And this could threaten not only the trade routes that we've been talking about with the Red Sea, but also risk international oil supply. As we've spoken about before, whilst oil is making new lows and falling to, monthly lows, ultimately, if a regional conflict does escalate to kind of that level, we do have on our hands a very sticky situation for oil, and a kind of situation which might be mirrored by the one that we did see during the Yom Kippur War, where we did see international oil supply shut down as a result of Saudi Arabia's kind of trade and export of oil completely dropping. And of course, we know that Saudi Arabia and the UAE are already engaged in a conflict within Yemen against the Houthis. And if now the US and UK get involved further, this could pull in other actors such as Syria, which are more aligned with the Houthis, or even certain Iraqi groups which are funded by Iran as well. And of course, we do have Hezbollah on that Lebanon border. So we are in a very sticky situation here. And if the US and UK do then start to get involved, which they may have to just simply deter the Houthis from attacking these commercial vessels, which are already damaging, international supply chains. If the UK and US do then get involved, we could be seeing a very serious regional conflict on our hands. And this is why it's so important to stay on top of, as not only is this affecting the oil kind of industry, as we've spoken about, but it's also affecting international trade, and considering we're already in a kind of global economic slowdown, this will dramatically worsen situations, as well as the fact that, these Western nations are dealing with inflation at all-time highs, and therefore, pressures on oil supply, pressures on international supply and trade as a whole will all worsen the issue at hand. And this is why it's so important to stay on top of these sort of topics, as not only are they affecting gold and other safe haven assets which we might trade, but also the international economy as a whole. So keep your eyes on this, but let's talk about this some more. Now, worries escalation grew after the UK Defence Secretary said the UK was willing to take direct action against the group to deter any threats to the freedom of navigation in the Red Sea, also claiming that not only protecting the Red Sea, that protecting the Red Sea, will also prevent other attacks elsewhere, with him referencing issues within Asia around Taiwan, for example, and other issues abroad. These statements followed U.S. Navy helicopters firing on Houthi boats in the Red Sea, with the skirmish killing 10 Houthis as the boats were attacking a commercial vessel. So we've already seen, direct action almost by the U.S. Navy. We know that the U.S. Navy has had its presence on the Horn of Africa and in the Red Sea during these times. But now we are really seeing not only the shooting down of Houthi drones and that sort of thing, but actually the killing of Houthi soldiers. Now, with the Maersk pausing sailing through the sea for 48 hours following the incident. Now, the White House National Security spokesperson has said the US was not looking for a wider conflict in the Middle East or with the Houthis, but at the same time, this is the situation which is occurring, where we are seeing, the US and UK step up pressure. We're seeing US Navy helicopters, engage with Houthi militiamen, and we're also hearing greater and greater threats from, the US. So the regional conflict is always there and is a greater possibility by each day. Now, 2 carrier strike groups have already been deployed by the US since, of course, the October the 7th massacre, and the Houthis have been targeting vessels since the conflict between Israel and Hamas started. The war has already heightened regional tensions, with states fearing a wider conflict, of course. Now, the attacks by the Houthis have forced 12 companies to suspend travel through the Red Sea, with the Houthis not only attacking shipping, but also firing missiles and drones at Israel. We've been covering that in length as well. As we know, the Houthis are well armed as a result of being an Iranian proxy group, and as a result they have many drones, they have many missiles which they're able to send and attack Israel with. And so, as we've known, because of course the Houthis do control parts of Yemen's territory, which borders the Red Sea, they've been firing drones and missiles which would then run along the Red Sea and towards Israel and the city of Eilat. I believe that's how you pronounce it. I'm sorry if it's not. But as we know, US warships and British warships, I believe, have already shot down these drones and missiles before. So, we have already kind of seen these skirmishes already take place, but it is stepping up in intensity. And hearing these kind of statements by, Grant Shapps, the UK Defence Secretary, does raise tensions most definitely. So keep your eyes on this topic for sure. The next article to talk about, though, is Apple. Now, we have been covering Apple recently on the topic of legal reckoning, but this is certainly getting interesting now, with Apple heading into 2024 facing a deal of legal troubles and regulatory decisions by the USA, with these decisions by the EU and US authorities changing the future of its $85 billion a year services business. Now, we've actually been kind of staying on top of Apple's issues in relation to legal issues most recently, and I think most recently, the greatest legal issue which comes to mind is the Apple Watch issue, where we did hear that Apple, on its latest variant of its Apple Watch, did in fact kind of overstep its intellectual property rights and kind of use certain IP which was owned by certain medical technological development firms, and therefore the Apple was then called for to halt its sales of the Apple Watch, both online and in-person stores in the USA. Now, I think We have heard that this kind of ruling has been delayed, and we know that Apple, of course, has appealed this decision, but definitely Apple has been dealing with a great deal of these issues, as we'll get into now, but there's many more to note, of course, and considering how powerful Apple is as a kind of a business and a leading face within the tech industry in the USA, it is very important to understand what's going on with Apple and how it's dealing with these legal issues. Now, the greatest issue is an antitrust trial against Google, which deals with the situation where Google had paid more than $26 billion to make Google the default browser on Apple devices, with this case putting at risk a quarter of the annual revenues earned by Apple's services arm. If Google does lose the case, it will stop making payments to Apple, and that's why Apple would lose out on this great deal of their services revenue. So this is a very important case to keep your eyes on, as it will be greatly affecting the sales for Apple and, of course, therefore its stock price. So it's very likely that many of these legal kind of situations will heavily impact the stock price of Apple. Now, Apple is also under scrutiny by Biden and the administration's concerns over the App Store's dominance, which has been changed already by new EU legislation. At the same time, the White House is trying to tackle what it considers as excessive corporate power and has made it clear its ambition to bring cases against big US companies. And this is something that we covered maybe 3 months back now, is this kind of comment by the Biden administration and certain more progressive figures within that administration against these larger tech firms, which they have a great deal with, including Apple and Google, which they believe have overstepped their welcome in terms of both, kind of IP and monopolization of the market. And so it'd be interesting to see how the Biden administration approaches that going into the election year now. Well, we are in it now, but how they kind of tackle that as the elections then do come up. Now, EU regulation now means Apple is allowing iPhone users to download apps elsewhere, which is now going to dig into the profits for Apple, which have been protected, of course, since 2007. Now, since Apple charges developers as much as 30% fee on digital purchases, and Apple draws between $6 billion and $7 billion in commission fees from the App Store, competitors such as Microsoft are already talking to partners about launching their own store. So, this is very key. This is taking away sales and commissions from Apple and does risk more sales for Apple. So it's not looking good legal issues wise for Apple, most definitely. Now, investors are forced to gauge the risk from regulatory and legal actions worldwide. So most definitely, Apple is in a sticky situation here going into 2024. We do know already that Apple was struggling, or at least, kind of these consumer focused, technological focused firms were already struggling going into 2024 as a result of decreased consumer demand, as a result of higher interest rates and inflation. And as a result, we have kind of seen individuals less so looking to, maybe upgrade their phone or upgrade their laptop, and instead just looking to hold on to the one that they've got at the moment. This is bad, of course, for Apple, which rely on that kind of continued sale to these customers for new iPhones, for new MacBooks, and that sort of thing. And so, Apple and other tech firms, have been trying to, deal with this issue. But, having these legal issues pile on top of that makes it a pretty bleak image and outlook for Apple as a whole. So keep your eyes on this, most definitely. Next to talk about, of course, is the charts, where, there isn't too much to talk about today, quite simply due to the fact that markets were not open yesterday for most assets as a result of it being New Year's Day. And I hope you all had a happy new year, or a good New Year's Day, and I hope all of you have a great new year. But ultimately, markets were closed, and so many of these assets have not moved at all since we covered them in the weekly market briefing yesterday. That said, we can kind of run over them quickly and kind of gain a better grasp going into today. So, of course, we do have the US 30 US indices to begin with, where they have stalled at highs. So, we did see this kind of stall out, and it will be interesting to see whether, the US 30 will carry on these gains that we have been seeing throughout December. Going into the start of 2024, simply down to the fact that we have now broken above their all-time highs, and arguably we did retest it around the 20th of December on the US 30, where we did near that 38.20 Fibonacci retracement level and that all-time high level. So it'll be interesting to see now whether we do continue this momentum, to the upside. Definitely keep your eyes on the US 30 for sure. Next to talk about though is the dollar, which is sitting around that 38.20. Of course, it's in a very interesting position because we do have those higher retracement zones also sitting around possibly better areas of liquidity. And when we do have these large gaps and then the market opens, we do see quite a great deal of volatility and quite a great deal of market gapping either way, up or down. So quite possibly we may be very close to the 61.80 when market opens, or we may run up to that very fast. So definitely keep your eyes on the dollar. We have had that bearish momentum for quite some time now, but keep your eyes on the Fed's rhetoric most definitely. But today, we do only have, I believe, US manufacturing and construction spending data coming out. So not too much interesting fundamental data for the dollar. But listen out for, of course, anything to do with the Fed in relation to the dollar. So keep your eyes on that. Next to talk about is Euro USD, which of course mirroring the dollar is now on a bearish move to the downside. It does look like a nice retracement opportunity though, and we are now nearing that 50% Fibonacci mark, which is lining up with that liquidity zone. So it'll be interesting to see whether price does react from that level to the upside. Next to talk about is pound yen, which did break below this kind of weak level of support. And ultimately it's in a weird position where we're not really sure on what levels are being respected by the pound for the moment. So we've kind of kept some distance for some time now since we saw that great volatility as a result of kind of yen speculation. So keep your eyes on pound yen. Next to talk about though is Bitcoin, which in fact is the only kind of asset that we usually talk about that was open on New Year's Day. And we did see great bullish momentum yesterday as price moved to the upside despite consolidating kind of nearer the bottom of the range most recently. But ultimately, Bitcoin has been ranging for some time now. What will be interesting to see is whether price will eventually break out and above this kind of strong resistance level at the top of the range that's been formed on Bitcoin. So keep your eyes on that most definitely. And with gold, of course, the markets haven't changed as the markets were closed yesterday, but we will be nearing that 38.20 Fibonacci retracement level, which lines up with that key resistance and now support liquidity level. So keep your eyes on whether we near that. The last asset, of course, being oil, which of course once again hasn't moved, but it will be very interesting going into today's trading session whether price will kind of interact with this liquidity zone that we're sitting at the moment once again, or in fact it will just continue its run to the downside. So definitely keep your eyes on this. That's all to talk about the chart. So a quick kind of rundown on the chart situation. But lastly to talk about, of course, is the economic calendar, where we do not have too much data coming out today, but some data which is very important to keep your eyes on nonetheless. Now firstly, we will be getting the French manufacturing figure, along with that the German manufacturing figure, and then the Eurozone manufacturing figure. Followed by that, we'll be getting the British manufacturing figure, and later on in the day we're getting the Canadian manufacturing figure. And then finally, to end off the day, we do have the USA, where we will be getting the US manufacturing figure and the US construction spending figure. So lots of manufacturing figures to listen out for, but this will all be adding to your economic outlook for these key nations and key kind of forex pairs. So definitely listen out for all this data. We've covered a lot on the articles though, and we've done another rundown on the charts. So I think it was a successful morning briefing anyway. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.